Philip, welcome to you. You are our lead analyst on Gabriel, which is a paying HCA client on our digital IR and research services. So last week, Gabriel, the specialist in fabrics for furniture and supplier to the global furniture industry, reported the delayed annual report for 23-24. Philip, what are the main highlights from the report and the update on this Mexican situation?
Yeah, thank you for the introduction, Casper, and thank you for the listeners for joining us on this video. So as you mentioned, the report was initially expected on the 20th of November 2024, and it was then announced that the report needed to be delayed, and it was then published on the 8th of January 2025, so last week. And the reason for that delay is because there were some accounting irregularities realized in one of its subsidiaries in Mexico, part of its master business, which is the unit that's currently in the carve-out process. So this has then initiated an investigation, which has been concluded, and the new numbers came out last week. So we'll take a deeper dive at those now. And if we start at the group level, we see that Gabriel realized a revenue of 912 million Danish kroner for the year 2023-24, which runs from the start of October to the end of September. And this was a 2% decrease on the year before on the top line. On the EBIT level, the group realized an EBIT of 11 million Danish kroner, and this was a return to positive EBIT after a negative result of 13.6 million the year before. But we also saw that there was a write-down in this Q4 report, and that also fed into the annual results. So this write-down of around 8 million Danish kroner was relating to this inventory situation in Mexico, due to these irregularities that were found, and that then impacted the full year results and also led to equity write-downs in previous years of a total of 51 million Danish kroner. But if we then look at the overall picture, we see that the year was still a challenging year with difficult markets, and we also saw that from the peers and competitive situation. And the company delivered roughly stable, slightly declining top line and a return to positive EBIT, but it's still been a challenging year for the company.
And as you mentioned, Gabriel also provided more details about both the continuing and the discontinuing operations. And if we focus on the continuing operations, how is this developing?
Exactly. So with the annual results, we also got greater breakdown of the numbers for the continuing operations and the discontinuing operations. So the continuing operations are for the fabrics business and the sample master business. You can read more about those in the extensive report, initiating coverage report. And the continuing operations actually saw a growth of 6.4% last year on the top line. And this is in the context of a challenging market situation. So actually solid growth, especially relative to what's been going on with other industry players. On the EBIT level, around 20 million Danish kroner EBIT, so positive EBIT, and also margin expansion from 2.9% to 4.1%. So I think the long-term growth outlook for the continuing operations is actually looking positive, especially if markets normalize at some point, either during 2025 or after. We see a room for growth in the continuing operations. The company announced guidance for the continuing operations, and that was announced in November, back with the announcement of the delay. So they're expecting 0 to 10% growth on the top line next year, and with an EBIT of 20 to 30 million Danish kroner. So expectations for flat to 10% growth and flat EBIT to 10%, 10 million Danish increase in EBIT. And what's behind this is the market situation is still challenging. That's because the housing market activity and the real estate market activity is still low, particularly in Europe, where 80% of the continuing operations revenue comes from. So there's still uncertainty into what's going to happen with the broader market outlook. But against what is seen at the moment, there's still a growth potential, and that's also what we're seeing, is that we still think that the continuing operations can grow. next year.
Yeah, and if we turn our focus to the discontinued operations, focusing on this carve-out process with the Fernmaster business units, how were the results here?
Yeah, great question. And I mean, this is the part of the business which has been relatively more challenged. And so the year itself saw a 10% decrease, and the top line on the bottom line actually saw a less negative result. So the Fernmaster unit saw a net result of 16 million Danish for the year 2023-2024. And that includes the write-down that was mentioned of 8 million. So if we compare that to the year before, where the net result was minus 44 million, there's a less negative result, but we're seeing greater uncertainty in this business unit. And part of that is the accounting situation in Mexico. The management is confident that the numbers reflect the right picture now after a thorough investigation. We don't see any reason to believe that there would be further write-downs, but there is greater uncertainty during this carve-out process. And we also then understand that a lot of management time has been focused on the Mexico situation, the divestment, and that this can have unforeseen consequences on the primary running of the business. So forecasting the Fernmaster performance for the year ahead is more difficult as we see it. We still expect probably a negative overall EBIT result for the year ahead, and just broader uncertainty, as we've mentioned in our report relating to this business unit.
Yeah, I understand. And if we look at the valuation based on all that you are saying here, Philip, what is our view on the case now?
Yeah, great question. So we maintained our reduced recommendation following the annual results, and that's primarily based on we still see a long-term solid picture for the continuing operations, but this greater risk relating to the Fernmaster and divestment process. So our recommendation is for a new target price of 195 krona per share, down from previously 225 per share. And also looking at valuation from a EV/EBIT multiples perspective compared to peers, we see that peers are trading at around 10 to 12 times EV/EBIT. These are selected peers listed in Denmark, also with exposure to broader real estate and housing markets. And our near-term picture for Gabriel is multiples higher than this. So we don't see a trigger there. I think our trigger for the case to be de-risked is then greater understanding of the divestment process and possibly a valuation attached, so that we can understand more how the balance sheet is going to look and how the company can return focus to its ongoing and continuing operations. So the company is expecting that the divestment will still be concluded in the year 24-25. So that runs up to the end of September this year. And we will keep an eye out for updates ahead and a potential trigger to get greater clarity and de-risking.
Thanks a lot, Philip, and also thanks to all of you listening to this video. Remember that you can read more about Gabriel on and also all of our research pieces on interest.dk. So thank you very much.